Hi, welcome everyone. Today we're going to cover how to connect your QuickBooks online account into Practice by Numbers. Once you log in, click on this little man, click Settings, and here is a button to connect your QuickBooks online account. Click on that button, Connect to QuickBooks. This will take you to the Intuit website. On this website, enter your username and your password. The next screen will show you your company file. Once you click on the company file, it will ask you to authorize Practice by Numbers to be able to read your QuickBooks data. Once you have done that, about 5 to 10 minutes later, you need to go back into your settings page. Once you're back in the settings page, I will show you how to map your chart of accounts, the QuickBooks chart of accounts that you or your accountant uses into the Practice by Numbers chart of accounts. All right, once the connection is successful, it will show you that your QuickBooks account has been synced up and you have to map your chart of accounts. So click on Accounts, and this will take you to your different categories of accounts: assets, equity, expenses, liability, others, and revenue. And there are three areas that you have to make sure all the mapping is correct. One is the asset, second are the expenses, and the third is the revenue. So let's quickly look into asset. What is the most important category to be completed? First is the bank. So we need to know where your money is stored, where your cash is stored. So we need to know, for example, if this is the bank, mark it as bank. Here's another one, bank. Let's mark this one as well as bank, which is basically cash. And let's put this next one in there as well. And then the other fixed assets, these are all good to have, but we really don't do anything with it. And we're good here. Let's now look into revenue. Now in revenue, what we need to know is what part of this is your income. So let's look into dental services. In this case, is marked as income. So we will call this one, let's say, fee-for-service income. Discounts, we will mark this under as refunds. And let's look into patient refunds, already mapped. This is all uncategorized income. That's completely fine. Let's now look at the third and the most important category, which maps your expenses to different areas in Practice by Numbers. Okay? And this is one of the practice. Your chart of accounts could look completely different, but the key is to map it into the right category in our system. So let's look here. Associate compensation. In this particular practice, they have associate compensation. There's quite a bit of associate information right here. Now in Practice by Numbers, we don't differentiate between associate salary compared to your staff salary. It's one and the same for us. Here I have mapped all the associate compensation into the right category: staff salary, associate benefits, vendor employee benefits, payroll taxes into payroll taxes. And I've done that quickly over here. Let's go down. You don't have to map every single account, but you want to map the major account so that you know where your expenses are coming from. The other important thing here is that associate salary is a variable expense. So I'm going to put that, all of these things, to say these are all variable expenses. Okay? And associate salary here as well is variable. Now let's look into a couple of other accounts here as well. Business expenses at a high level, accounting goes into accounting. Bad debts, it can be an uncategorized expense. That's completely fine. Commissions and fees can stay as an uncategorized expense. Or maybe let's see if there's another category here that we could use for business expenses. Commissions and fees. There's no real direct, maybe we can map it into professional fees perhaps, but it's not going to make a difference in terms of your overall profit and loss. Okay. Computer and software expenses. Let's map all of these ones into computer and software expenses so that we know they're all going into computer and software expenses as well. So I mapped all the computer and software expenses. Now the credit card fees is a bank service charge. That's what I've mapped it to, and I'm going to make that into variable by revenue. It really doesn't matter what variable it is. All we're trying to figure out if it's variable or not. Dues and subscription maps to dues and subscription. Now let's take ahead and map the insurance expense as well. I'm going to see if there's a category here for insurance expenses. I don't think we have one. So in that case, it's a non-categorized expense. You can just leave it over here, or you can. I see there's a general liability, and we're going to put it in there as well. Business owners, workers' comp. Sure, that can go into a liability, or you can stay into an uncategorized expense, and that's not going to make a difference in how your profit and loss is calculated right here. Legal and professional fees. I'm sure we have a category for legal, so let's go ahead and enter that there. Okay. And all the office expenses, office service costs, it's okay for them to be in the uncategorized. So because this will all get clubbed into that business expense, and that's fine. Okay. Now professional development. Now the key difference here is we're trying to categorize an expense being an office expense or a doctor expense. A professional development, I'm assuming for this particular practice, professional development is for their CE courses, for the doctors. Assuming it's for that, I will assign this particular item into owner expenses. I'm going to put this under as owner continuing education. Let's go down, personal development, same thing. I'm going to go down here in owners continuing education. All of this goes down there. Professional fees is maps to professional fees. This is great. Let's keep looking down. Shipping, freight, business expenses. I'm sure we have a postage category. I'm going to map that there. Supplies and materials. Now, this is under the supplies category. So I'm going to take and find a supplies item right here. So this is office supplies. Put it in here. Medical supplies is mapped to dental supplies. And other office supplies are mapped here as well. I'm going to map this also to supplies so that we have a clear indication of what is the total amount of supplies over here. High-level taxes. These are probably overall taxes. I'm going to put those under business expense, property taxes, and there's another property tax. We have uniforms, and we're going to put that under uniform supplies. And this is the way you just keep going down and categorizing the expenses. But remember always to make sure you also modify the expense type if it's a fixed expense or if it's a variable expense. And here are some promotional expenses, marketing, advertisement, all of them should go down and get marketed to advertising. Okay. And as I see, all of my marketing expenses have been marked under advertising. And you can create additional categories underneath, but even if you just map it to the highest level, which is advertising and promotion, that's good enough. Okay. Here are two very important expense categories, amortization and depreciation. Remember, these are really not real expenses. These are more of write-offs. Okay? And they should not be considered as part of your office expense. So that's why these should be put under doctor expenses. So I'm going to pick the amortization expense. I'm going to go all the way down, and I'm going to put it under other owner expenses. And the same applies to depreciation, other owner expenses. Interest expense, this also should go under, this is like a loan payment that you're making, goes into other owner expenses. And that brings us to other owner expenses as well. So for example, the payroll is for the owner, should be considered separate. So you can really truly measure what is your office overhead. So in this case, I'm going to take all of these items between the owner, and I'm going to map it under owner expenses. So let's take the first one, for example. Owner payroll, so this goes under owner compensation. Owner pension plan goes under owner compensation as well. Owner salary goes under owner compensation. S Corp health insurance. Now, if this is just for the owner, then it should go under owner. If it's for all employees, then it should go under benefits. And you decide, in this case, I'm going to assume this is for all employees. I'm going to put it under employee benefits right here. And all of this stuff is, again, this is all variable. Okay, and I'm going to go ahead and modify this offline and come back. But before we do that, let's look into all the payroll expenses. All of these payroll expenses now, admin, assistant, contractor, employee benefits, all of this is payroll expenses, and they are all variable. So I've gone ahead and done all the mapping myself, and just let's take a look. So I've obviously mapped all of the owner expenses into the owner category. All your amortization, depreciation, interest expenses should all go under the owner, because those may or may not be available for the next person. For that, so that you want to measure your true office overhead, you want to take all of that stuff out and put it under the owner expenses. Okay, and I've also gone ahead and categorized all of the payroll expenses. So the payroll, staff payroll, any assistant, contract expenses obviously went into temp labor. Employee benefits, there's a category for that as well. Payroll service fees, we have a category for that, and these are all variable by the hour. Now, there are certain expenses that are not, they're staff expenses, but not variable. For example, any of the company contributions are mostly fixed, and they don't change. They change some, but they don't significantly change by the number of hours worked, because there's minimum limits on those. Okay, and so you have to decide which you're going to map it as fixed or variable expense, but it's not going to move the needle a whole lot if you look at variable and fixed expenses. Another thing that doesn't change by the hour is health insurance premium, for example. So in this particular case, I put that as a fixed expense. Okay. And so the area that you have to be careful with is payroll expenses, lab expenses, your supplies expenses. Okay, they have to be mapped to the right category for our system to work well. So in this office, they have done supplies at the bottom. Of course, these all have been mapped accordingly. So let's go ahead and save this. And then we're going to go into their business section and see what's happening. All right, so this is what it looks like after all the mapping is completed. So you have all your business expense categories, you have your payroll expenses and the supplies. So if you click into, let's say, business expenses, it goes into business expenses, and most of these things are uncategorized. Now, if you want to categorize it even more, remember we left many of our business expenses as uncategorized. You could go and map each and every account, but it has to be valuable for you. So if you want to track how much money is going towards each vendor and how much of that is being categorized, go in and map every single category. That's completely up to you. But at a high level, we have now correct data flowing. The overhead for this particular office was about 45%. They collected $68,000 and their overhead was $28,000. And their profit after paying the owner was about $29,000. Hopefully this video was helpful, and you guys can map your QuickBooks online account to your Practice by Numbers account and then keep track of this data on a regular basis.